Okay. Sophie Tremolet is the author of a new research paper published jointly by the Share Research Consortium and the EU Water Initiative Finance Working Group. The paper investigates small-scale finance for water and sanitation in developing countries. So Sophie, what is the current state of household access to sanitation and water services in developing countries, and what is the role of small to medium-sized enterprises?
Hello, good morning. So as you know, we have reached the water MDGs, so the water access has improved quite significantly in the latest years, but we're still very far behind in terms of sanitation access. So there's still roughly 2.5 billion people who are lacking access to sanitation. And the role of households and small-scale businesses in bridging that gap is enormous, because there's some estimates that households actually contribute to half of capital expenditure in sub-Saharan Africa in water and sanitation, and a lot of that is their contribution towards building on-site sanitation solutions, i.e. latrines, septic tanks, etc. So the households themselves are very important as service providers, as providers of services to themselves or to others, such as their neighbours, if they sell, water, for example, to others, or if they let others use their own toilets. But you also have a whole range of small businesses which are serving a very important gap in the market, which are, for example, water carriers or latrine builders in order to help households, build the latrines, or latrine emptiers, etc. And given the gap in service, the insufficient coverage of utilities in a lot of African but also Asian countries, you have these providers filling in the gaps, and in some cities it could be that 90% of the population is served by these small-scale providers. So they represent a very important range of stakeholders in improving access to services throughout the developing world.
Fantastic. So which small-scale financing options are currently available? So
these small-scale providers are very limited in the range of financial services that they can access at the moment. Households, when they need to make investments in their own latrines, are constrained because these kind of investments can be very substantial compared to their income. It varies a lot from country to country, so you might have, on-site sanitation costing $15 a unit in Bangladesh, but in West Africa, for example, it can range up to $200 or $300. And this, for poor households, represents a very important share of their income. So in order to face those costs, they can either save, or they can borrow from others, or they can borrow from, a lending institution. So for small amounts, that would be qualified as microfinance, in the range of maximum of $300. For larger amounts, and that's something that is more relevant for small-scale businesses, that would be called, referred to as mesofinance. But these financing solutions are still quite limited, particularly for water and sanitation businesses. So we find that small-scale businesses, in particular, still need to rely on traditional sources of finance, such as borrowing or money lenders, and have very limited access to mesofinance and microfinance at present.
Okay, thank you. So why do you think small-scale finance models are not used more in the sanitation and water sector?
Well, there are a whole range of issues, I think. I mean, one is that, these businesses are, for the most part, informal, and banking institutions, even traditional banking institutions, I would say, are very wary of lending to informal organizations. But it's also that the sector as a whole is not very well known to these institutions. We have been going to see, as part of the Share research, we've been going to see some microfinance institutions and banking institutions and describing to them the kind of needs that exist in, peri-urban areas of Dar es Salaam, for example, or in rural areas of Ghana. And it comes as news to a lot of them that there are these needs, and that they could potentially do something about it by, extending microloans or slightly larger loans to them. So in terms of the microfinance, it hasn't been very developed so far, although there's some very successful examples, because a lot of microfinance institutions consider that to be a non-income generating loan. So they would traditionally feel more comfortable making loans for a hen that will enable the person to then buy a goat and then a cow, something that generates income in order to reimburse the loan. Whereas the microfinance loans for toilets or for even water tanks or investment in water and sanitation are considered to be income enhancing. That means they improve the quality of life of people, they enable time savings, reduction in medical expenses, so they enhance income but they don't generate extra income. And for that reason, a lot of financial institutions are still a little bit reluctant to extend this kind of loans.
Okay. This is a more complex financing model.
Because it's more complex, because they don't know about the needs, because they've never done it before, or because they're not getting sufficient support from donors in order to do it.
Okay. So, leading on from that, what role do you see for the donor community in this area?
So, I think the donors have a very important role to play in kickstarting that market, because we can see the potential, the investment needs that are there for all these small-scale providers. We've identified the constraints, and donors can play a role in lifting some of these constraints, such as to leverage funding from, commercial finance or social funders, social investors. So they can play a number of roles by, for example, lifting this inadequate access to information, the fact that many financial institutions are not aware of the needs of the sector. So that could include grants for market research, for assisting with product development, for sharing information, or in some of the cases it could include guarantees, for example, which we've talked about for a long time in the water sector, are still not very used in a lot of places, but it can basically be guarantees so that commercial banks or microfinance institutions have more comfort to take the risk of getting into that market. And once they've sort of experienced that market, they can then make more loans on their own. In some cases, these financial institutions are also just resource constrained. They don't have access to enough capital, especially given that there's competition from other sectors, which might be using up a lot of these capital. So the donors could provide seed capital for which can then be revolved as part of a revolving fund arrangement. And this is what was done, for example, in Vietnam, with funding from the World Bank, from also Nordic donors who gave $3 million to a revolving fund for access to sanitation and connection to sewage systems, which was then managed by a leading microfinance institution in Vietnam called the Women's Union, which then itself extended some small loans to groups of women who were joining together to borrow in order to build these facilities. And that's worked really well. During the course of the project, the funds were revolved several times, giving access to 200,000 households to sanitation. And that worked so well that the government of Vietnam decided to take it on and to roll it out through its own sort of national development bank, the Vietnam Bank for Social Policy, which then led to extended access to several million households, 3.5 million households by 2011. So this is a clear success story of how donors have kickstarted the market. There was still a need for public support, but the government has adopted it as part of its national policy and has really rolled it out.
Okay, so you've just given us a very clear, successful case study of how this kind of model has worked in Vietnam, but there must be challenges for this kind of complex financial support. So what are the challenges for donors in supporting small-scale financing of sanitation and water?
Yes, so some donors are concerned by the equity impact of this kind of program, and because the research has shown that it is clearly not a solution for everybody. It's not a solution necessarily for the poorest of the poor who might not be able to borrow, especially given quite high rates of interest for microfinance. And there are some people who are totally excluded from financial services and therefore would not, borrow for building a toilet. This is changing because, poverty is reducing. In a lot of countries, access to financial services is going up, especially thanks to, mobile services, mobile banking services. We've seen a very impressive case in Kenya, for example, where M-Pesa has been exploding over the recent years in terms of its coverage. So donors are sort of, can see supporting access to microfinance and mesofinance as one of the tools that they can use in a package of intervention in order to promote access to sanitation. It cannot be the only, solution, but it's certainly part of the package to reach quite a large percentage of the population, the moderately poor, I would say. However, there's some challenges, that they need to face, which is that it's much more difficult to structure this kind of project than to make a loan to a big water utility or to a municipal department in charge of sanitation. Because you have a multiplicity of actors, which are small scale, which are, for the most part informal, so you have, it's very difficult to check the credit risk of these institutions. So in order to reach those people and those borrowers, it's important to think about channeling arrangements, how you can get the money from A to B, A being the donors, B being the ultimate recipients. And there's a whole range of possibilities to do that, which is what, one of the things we review in the report. You can either, support a large MFI directly, which is, for example, what the World Bank had chosen to do in this program I just referred to. So there in Vietnam, there's a well-established microfinance institution which has branches in every single, village and has therefore a very broad spread. In other places, it's more difficult to identify this kind of institutions, but you could go through, existing Apex institution, which have a function of channeling funding to then different microfinance institutions. That's what we've decided to do, for example, in a program being designed for the European Investment Bank and the Agence Française de Développement, where we identified in Ghana an Apex bank for the rural and community banks, which can then channel microfinance instruments, so i.e. seed funding for revolving fund, and also a grant element to reduce the portion of the loan, the value of a loan, effectively, to make it more affordable. But this Apex Bank can play this channeling role on behalf of the funders, the large funders, and can therefore check the credit history of the banks themselves, which then, themselves check the credit history of the borrowers. So you need to think of, a cascading series of institutions so that the money can be channeled in that way.
Okay. So we've talked about the role of donors and the challenges for donors, but what do you think the roles are for other international actors, such as trusts, foundations, and international NGOs?
Mm-hmm. Well, there are some NGOs which are specializing in this area. There's one in particular, I'm thinking of water.org, which has developed a program called Water Credit Initiative, which has done a lot in order to create a market for microfinance, particularly in India and in East Africa. The other set of actors that we see emerging are social investors, Acumen Fund or other sort of SME investment funds, which are appearing and which are increasingly getting interested in water and sanitation. Their involvement has been quite limited so far, but they've been active much more in energy, for example, renewable energy. But they now see increasingly water and sanitation as being an area for development. And they can act as equity investors as well, provide what they call patient capital or capital with lower expectations of return than some purely commercial financiers, which can enable these MFIs, local MFIs or Apex institutions to develop themselves. So they have a very important role to play as well.
Okay. So in conclusion, what do you think the three things are that need to be done differently to realise the potential of these approaches and to reach the missing middle?
Mm-hmm. Well, I think the donors, traditionally we deal with donors that are quite fragmented internally. So they would have one department dealing with water and sanitation where people may not know very much about microfinance or mesofinance. And then you would have another department which deals with microfinance and mesofinance, which traditionally have been more focused on the traditional segments, that are of interest to microfinance institutions, i.e. income generation, or in some cases energy efficiency, as I just mentioned. So there's, first of all, donors need to have a conjoint approach between their internal departments, start developing projects jointly, and there is an important role to play for water professionals and sanitation professionals in demonstrating how this can be done, and work with their colleagues who are specialized in microfinance, which is one of the things we've done in this research is working with specialized microfinance consultants, because each country has its own specificities, and it's very important to understand that to assess the current market for microfinance and mesofinance generally, not only for water and sanitation, but to better understand how this market functions in each country, so that each program can be sort of designed in based on these local circumstances. And then I think there are experiences which are positive and encouraging. I've mentioned Vietnam. There's also a number in India where the Dutch government has been supporting a program called Finish, which is very innovative, which aims to provide 1 million households with sanitation via microfinance, and has a system of incentive-based payments for microfinance to institutions to extend coverage to a whole village, for example. So these kind of programs are very interesting and could be scaled up by other donors. I mean, this formula exists already in India. Of course, it has limited funding, but it could be, scaled up or taken on by the Indian government. And finally, I think some donors, those donors which are more reluctant to get involved in microfinance for water and sanitation, can still do a lot in improving the overall framework for this kind of small-scale finance to emerge. I mean, there are things like funding the establishment of credit bureaus, so it becomes much easier and much cheaper for all financial institutions to check the credit history of, a borrower. Or it could be helping with the formalization of these small-scale businesses, so that they're themselves more able to, present their financial accounts and be in touch with a bank so as to access funding. Or it could be providing business skills, to these small-scale businesses. So there's a whole range of approaches which contribute to building a more favorable environment for these small-scale operators, which donors can contribute to.
Okay. Sophie, thank you very much for your thoughts and your and your explanations of the report. The report entitled Small Scale Finance for Water and Sanitation can be accessed on the Share Research Consortium website, www.shareresearch.org. Thank you.